Starting the program, sir.
Yes, ma'am.
A very good morning to one and all. I am IR Kalyani, Assistant Professor AMSOI. It gives me immense pleasure to welcome you all to the online induction program for MBA 22-24 batch. I welcome today's chief guest, Dr. Kishore N, our Secretary Sir, Y. Satyanarayan Rao Sir, and our Director Ma'am, Professor K. Vijayalakshmi Ma'am. I now request our Director, Professor K. Vijayalakshmi Ma'am, to give the welcome address.
Thank you, Kalyani. Respected Chief Guest of the Day, Dr. Kishore, our Secretary, Sri Y. Satyanarayan Rao Garu, staff and students, a very good morning, and I welcome you all for today's induction program. We usually involve industry speakers during this induction program. So as a part of that, today we invited Dr. Kishore Nuthalapati, Director Finance at BEKEM Infra Projects Private Limited, to give a talk on assets. So when I say assets, you all may think that it's a very pure technical concept, but it is the base of any business. We love to hear from today's speaker what it means to him in the role of Director Finance, because he is the one who deals with all the inflows and outflows of cash and other resources. So thank you, Dr. Kishore, for accepting my request to interact with our students. Over to Kalyani.
Thank you, ma'am. I now request Ms. N. Ramya, Assistant Professor AMSOI, to introduce today's guest, Dr. Kishore Nuthalapati. Over to you, ma'am.
Good morning, sir. Good morning, ma'am. Dr. Kishore is a corporate finance professional and an economist with 25 years of experience in finance, banking, credit, project management, HR, and legal. He holds PhD in finance, ACS, company secretary, PG degrees with university level ranks in commerce, management, and law. He is holding honorary positions on board and committees. He has been contributing to policy-making bodies. He addressed several forums across India and outside India. He published many articles and guided more than 500 research projects. He has traveled widely in India and abroad. He is mentoring startups, MSMEs, scholars, and aspiring professionals. Presently, he is serving as a Director of Finance at BEKEM Infra Projects Limited. Thank you, sir. We welcome you.
Thank you, madam. Thank you, madam. So, with your permission, I shift to the presentation mode.
Thank you, Ramya ma'am.
Okay.
Yes, sir. I welcome you, sir.
We have, yeah. Do we have any protocol, ma'am? I thought.
Nothing, sir. You can start your address, sir. Thank you so much.
Fine, ma'am. Thank you. First of all, sincere thanks to Professor Director Vijayalakshmi madam. It is great encouragement from ma'am, and also thanks to AMSOI for this good opportunity, and wishes to all the students who are participating in this program. This is a nice practice which started with the best of the world's best of the management institutes, and is adopted as a good practice by AMSOI also, that a proper induction is conducted and they are allowed the good interaction with academia experts, industry experts, and also exposed to some of the concepts. This is a very good practice. In fact, it gives a lot of confidence. So, with a brief intro, let me start with the today's session. As a part of induction, it is very nice to see some of the subjects also being discussed, which is rare. Generally, organizations spend a lot of time in introducing
Sir,
only faculty or speaking
sorry for
about
the interruption.
Yes,
Can you just 2 minutes, sir? There is a disturbance. Just 2 minutes, sir.
Okay, ma'am. Okay.
You're not audible in the seminar hall.
Okay, fine, ma'am. No problem.
Sir, you may continue, sir. Sorry.
Yes, ma'am. Doesn't matter. Yes. Okay. Fine. So I was stating that this is a good practice, rather best practice, to also include discussion on some of the basic or key terms what you would study as a part of your 2-year curriculum. Because when you understand the basics well, which you are supposed to have the knowledge by the time you take up the management program, some of them or some of you may not have complete understanding. To facilitate such kind of students who need to catch up and to refresh the knowledge of others who need to reorient themselves, this is a fantastic endeavor. And with sincere thanks to ma'am and secretary sir and Kalyani ma'am, Ramya ma'am, and all of the faculty members, and to the students, I start now. We are discussing about asset. Small disclaimer with my associations, like so I skip it because the faculty members know, ma'am and others know. But because precisely one point what I would like to stress upon is I spent good amount of time with Times of India, Economic Times Group, right from my PhD days between 96 to 98, when I spent good amount of time in the principal library at the main library of Times of India, Mumbai. That was a time we didn't have access to internet, no documents, and then we couldn't afford to print all that stuff. And Times has got full floor of library, about 10, 20 times the size of our OU library, very big library, and they would have been maintaining all 190, 180-year-old papers with them, whatever they publish, and with properly chronological everything. I was one of the beneficiaries among many other beneficiaries from our OU and best of the institutes, even from IIMs, as a part of research to access the data. And since then, Times of India has been supporting many scholars and many industry academia people like me, and that's one of the good institute. So a brief acknowledgement, rather thanks to them now. So some of the things which are very basic, rudimentary, you would know, maybe you don't know, not required to know, I'll skip. But others we stress a bit of time and elaborate. So the word meaning of word asset is value, resource, and enough resource, enough value. That is the basic meaning. It originated from Latin and moved to French and became an English word, and now used very widely. If I thought of asking you what's a word you would have heard very widely in your courses until now, other than your own name, other than your favorite hero heroine's name, other than your village name, other than your mom, dad, or sister's name, you would have heard one word, which is asset. More than many other words, you would have heard the word asset. That is the importance of this word in accounting, finance, or all commerce streams. Therefore, the basic understanding of this word is very important. Coming to the dictionary meaning, it is also not very different from what we discussed as the meaning in the origin. It is, the asset meaning is stated as some value which is held for paying debts, which means asset is meant to pay, to discharge a debt. So what is the value of debt is reflected, understood when we speak about the value of asset. What is the value of asset is either respected or disrespected, disregarded, if we have to understand what is the debt to be discharged or paid. Now you understand that whatever is valuable and held is asset, and the reason why you hold an asset is to discharge debt. Now debt could be a word which was interchangeably used for liability and equity also, because both are obligations of the business. Therefore we can, in summary, in some state, that asset is a value what you hold to discharge an obligation. Obligation could include debt, or it could include even equity. This is known to all of you. You are masters of this equation. It's accounting equation, balance sheet equation, or the basic equation of commerce. Assets is equal to liabilities plus owner's equity. And this balance, this tallies, it balances, it tallies. You may question, has Enron balance sheet not tallied? Has PNC balance sheet not tallied? Has our own Satchem Kingfisher balance sheet not tallied? Yes, they do tally. They tally for tallying sake. But in true sense, only when this accounting equation tallies correctly is when the business is healthy. Assets is equal to liabilities plus owner's equity. Residue being owner's equity, it also needs to be positive for us to state the business as healthy. Where all is the word asset used other than in your curriculum, in your discussions, all those things at multiple places. Some of the select things are listed out. This is a very inclusive list. This is a very exclusive list. There are a lot of things which are not included. Income tax defines very clearly multiple places what asset is, what is capital asset, what can be subjected to gain, etc. Companies Act, for the purpose of depreciation, for the purpose of financial statements, it uses the word. Then FEMA is another important legislation which speaks about asset, because you may expend money and incur the expenditure out of India, but when assets of India need to go outside, they are subjected to a lot of regulations involving even prior permissions as well. So now you understand what is asset will have so much of regulatory eye as well. It commands, rather, it commands that respect. It has the regulatory requirement as well. And IFRS and Indies, which you know are now mostly about value, mostly about assets. What do you value? You don't value anything else other than an asset. Be it land, be it building, be it any other financial asset, all you do is valuation. There is no value concept if there is no asset. That is the importance of the word asset. And surface C, securitation and reconstruction of financial assets, and enforcement of security interest. So you can enforce security interest only when there is asset. The non-performing asset is one asset, which is a loan account, and there is other asset which is held as collateral or whatever, which could be enforced. This is the importance of asset. Now, before I move to discuss the classification, let me explain briefly about the difference of those two, or rather, I will take that a bit later after this. Maybe, yeah. Base of classification. We classify the assets on multiple bases. The three of the popular bases are as follows: convertibility, existence, usage. Convertibility, one is current assets, other is fixed assets. You know what are current assets as examples: cash, deposits, receivables, etc. What all can get converted into cash or cash equivalents during the period of operating cycle could be 1 month, 1 day, or 1 year. For a person who is running a business, a small restaurant, selling idli on his cart wayside, the street food vendor, his operating cycle is 1 day. He has to invest in the morning, and he has to liquidate all his amount invested in the operations by evening. His operating cycle is 1 day into 365 days. Therefore, wafer thin margin for him per day, and the price what he's able to offer to us, a very affordable price, is still giving him the returns which any other big hotel also would have earned on the same item of, say, idli, vada, dosa, whatever you name it, as per your wish. Now you understand that the smaller return per unit per operational cycle into multiple operational cycles is the cumulative profit a business earns. A big hotel or any other restaurant would have shorter working capital cycles, operating cycles or working capital cycles than this wayside cart. Let us say you're talking about a catering organization which supplies to Air India. Their operating cycles are just 3, for few 2, and for the best is 4, which means they get their payments done only once in 4 months time. And if you're talking about some western countries, 12 months. Now you compare these two: street food vendor having an operating cycle of a day, and a catering organization having an operating cycle of 3 months. All else remaining same, operations, etc., etc. Specifications different, packing different, etc. But the core business remaining same. Operating cycle of one business is 1 day. For the for the same operations for another business, it is 3 months. In some cases, 6 months. What gets converted in this operating cycle is very important. So you can't expect credit from the street vendor for your one plate idli of 25 rupees or 40 rupees, 30 rupees. Whereas you can expect credit from a restaurateur who is a caterer and is supplying to, let's say, one of the Air Force for 6 months time. It is not unusual there. Therefore, all current assets will stand converted into cash within the operating cycle, whereas fixed assets are meant for the purpose of business, like land, buildings, machinery, etc., what you usually understand. And what are these held for? They are held only to conduct your business in these fixed setups, not meant for sale. And physical existence, they're self-explanatory, tangible, intangible. Tangible we have seen just now, and intangible could include any of the rights, claims, or entitlements what the business holds. Goodwill is your right, patent is your claim, trademark is your right, corporate is your right. So all of these claims, rights, entitlements which hold value, either giving revenue or either holding value on sale, both of these things could be called as intangible assets, and that is on the basis of existence, physical existence. Usage wise, operating assets, non-operating assets. Here, the operating meaning is not the same what we spoke about operating cycle. You may be holding two buildings. One building is meant to house your office, another building for your factory, another building for your packing, warehouse, etc. These are all operating assets. You have another building not used in the business as a business asset, but is held as an investment property and is leased out to some other tenant, and you're earning rent. That is non-operating asset. Non-operating asset is not something like non-performing asset. This is just non-operating. It is very much performing. So those are non-operating assets. Meaning, to repeat, these are value holding assets. Value holding assets in the company, owned by the company, but are not meant for the core business of the company. Then why do you invest? Why should we spare the scarce resources into these assets? It is anybody guess. But before we discuss that, we have to understand why and what kind of assets you have. This is just for the uh, eyesight. So what are tangible you could see, what are intangible you could see, some of them covered well. Living assets. So trees, if you're talking about orchards, companies which are in the business of Adani has got a lot of orchards. Last week we have done one case study for ISB students, the final semester students. In fact, they've already bagged their employment orders, and they're just holding the orders and attending a couple of finishing school sessions in their campus. So we administered a case study on growth strategies of Adani Group. And Adani Group has got Farmpix, one of their subsidiary, which has huge tracts of orchards in Himachal Pradesh, which produce one of the best variety of apples. They're sold with the Adani brand, Farmpix brand. What is the asset of that company? The asset of that company is just trees. The land has no value. It is just the trees which hold value. So trees can be assets as well, and cattle can be assets as well. More particularly, if you're talking about a company which is situated well in Hyderabad, Dodla Dairy, or any other company, we are not naming as Heritage, Dodla, just for the sake of example and for better understanding. It could be Heritage, it could be Dodla, it could be Creamline. Creamline is now owned by Godrej, of course. What do they own? They own cattle, rearing cattle. The milked from these cattle is sold, which is the stock for them. The milk and the curds and the dairy products are stocks for them, and the cattle is their assets. Imagine how beautiful it is. And all the calves that take birth are nurtured and reared into full-fledged assets, and a decision would be taken if they can be milked. If not, they would be sold. So their focus is all on their assets, which are cattle. Stock being milk, curds, dairy products, other than etc. And birds are also assets. If you go to Punjab, if you go to Kerala, there are many companies which hold no asset. The shed, a lease part, employees like me, you only employed for a temporary purpose. And what is the asset, main asset? Only birds. The emu board firms, what you would have seen, same thing down here in Nalgonda and many places in Srikakulam, Vijayawada, Vizag, etc. All you have is just birds. He wants birds. He would claim, sir, I have 82,000 birds. That is my asset. And none is his asset. They're all on obligatory rental payment basis. Similarly, cattle, of course, goat and sheep have different character than normal cattle. Similar lines. and moving assets self-explanatory. You'd find some of the movie stars and businessmen owning ships on their own. And if you go to Kerala, many own boats. Why film star? Why celebrity? Why businessman? You and I also will own a small boat. You go down here in Tenali, some of the places in Andhra Pradesh, Tenali, Guntur, you'll also find many places, many families owning small boats because they move from island to island on boat only. And many own jets. And few, like Adani, own even rails. Adani owns rails, and JP own rails for transporting their carts. Ultratech own rail lines, private rail lines. They're all assets, kinds of assets, some of the exotic assets as well. And what is the purpose, utility of various assets? So some of them covered, and what needs to be elaborated, I'll elaborate. Fixed asset. They are not meant for sale, but they are meant to undertake the operations of the business, be it office, be it factory, warehouse, packing, setup, etc. Current assets. Current assets are the assets of the business. It is current assets which will beget revenue, which will beget profits for the business. Fixed assets at best may only get you capital gains over a period of time. That too, if should you prefer to sell the asset for need. Investment properties. This deserves a bit of more elaboration. As a part of your study, who have studied financial management or management accounting, and those who would study, you would have heard the working capital concept. In the working capital concept, you also understood that there could be a variable working capital and fixed working capital. The fixed working capital is nothing but salaries paid to employees like me, salaries paid to employees like you, the rent paid, the minimum fixed expenditure, what you have to incur on a monthly basis. It could be power, it could be utility charges, it could be all transportation, all those things, telephone bills, etc., etc. These expenses almost remaining fixed in the business can't be exposed to the risk of funded only if you have revenues on a daily basis, which means for a seasonal business, these expenses are fixed on a daily basis, but the revenues could be twice in a year, thrice in a year, sometimes once in a year. So Mr. Kannan, who is one of the largest businessman in Sivakasi, gets his revenues, 96% of his revenues, only within 20 days time. That you guessed it rightly, Diwali time. Rest all is just outflow for him towards the towards the amount invested in the stock. He keeps manufacturing the crackers all through the period to sell on one day, precisely one day, Diwali day. Rest all days are manufacturing days, producing days. Now imagine, do you think he need not pay his salaries for the whole of the 364 days? And he need not pay rentals, he need not incur all expenses? No, they're all incurred on a daily basis as usual, as a part of business. But income is only once in a while. So the fixed expenses need a matching fixed revenue in the business, which will not trouble the business to incur, to meet, and to honor these fixed obligations. Therefore, to have a fixed stream of revenue in the businesses usually hold some investments, be them in financial assets, be them in building, in mutual fund debt instruments, etc., which will beget a fixed stream of revenue on a monthly basis. So the rentals that will emanate and flow into the account will be used to pay the salaries of the employees without any worry, trouble, or delay by the business. Now the variable working capital, the variable revenues all can be used as it is required and as it could match. That is the importance or the requirement of holding investment properties in the business. It may also be for a speculative purpose because you get to know that one of the property is for sale, up for sale at a very throw price, and you want to own the property to sell at a dear price in the due course. That also could be one of the motive, but the main motive of business is to have fixed revenue stream to meet your fixed working capital requirements. Investments also are of similar kind, but when you say investments in our India's balance sheet, IFRS balance sheet, investment properties are the tangible physical properties. Investments investments are into financial assets. Your investment into a trademark is also investment in a financial or related asset. And deferred expenditure assets, yes, this is known to you, but I would elaborate. And you want a loan from one of your friend. So like what Suresh Chandrasekharan has done to Jacqueline Fernandez. So what do? You will sponsor an ice cream. You'll sponsor a trip. All you will call it as investment. And what does that investment do? The ice cream what you offered to your friend will build goodwill for you. And tomorrow when you ask her 100 rupees or 1,000 rupees loan, although she doesn't want to lend you, she can't say no because you have built goodwill with her. Therefore, you consider the ice cream as your investment, although it is a simple expense. And what does this expense do? What does this investment do? It will get you loan 4 or 5 times in a year until you default. Thereafter, anyway, you'll not get loan from her. That 4 or 5 times loan is possible because of one expenditure or asset what you have built, which is this ice cream expenditure. That is a silly example, though. Companies which build huge amounts, which invest huge amounts on paintings, hoardings, or sponsoring. Baizu has sponsored the World Cup of football. I was one of the critics of it. Why should the blood-strained money be used to sponsor the players who are playing elsewhere, some other place in the country, player belonging to some other country, sports played elsewhere? Why? And why are you after the students to pay the money on time without even allowing them 7 days? You are charging 18% interest for a day, for a weekday's delay, and you are sponsoring huge amounts. Why are they doing it? They are building deferred expenditure assets. The painting on the wall, what would stay put for 1.5 year, 3 years, 2 years, is an asset what you have created. It will not get you any revenue, but it facilitates the revenue generation. Therefore, you have to consider it as an asset and write off over a period of time. That over a period is a judgment of the management. These are deferred expenditure assets broadly. Now, one word what I said we'll discuss a bit later. This is the time now. You have an expense or an expenditure. The ice cream what you sponsored to your darling friend is an expense, but in your heart you consider it as an expenditure. What is this mess? What you incur as an expense will go into P&L, profit and loss statement, and will be written off in the same year, charge it to your revenues. What you consider as an expenditure is an asset, which means what is expended is expense, what is created as an expenditure is asset. Now the difference between these two is, whenever I say I have expensed it, it is spent as an expense and it is lost. When I say I have expended, I mean that I have created an expenditure, which is asset. Income and expenditure account is a title, that is a misnomer for this understanding. Expense is an expense written off in the same year in your profit and loss. Expenditure is expenditure which has created an asset meant to live for a period of time. That for a period is more than 12 months, and sometimes it could be indefinite time as well. Now, we are discussing specific relevance. Within that, we took the opportunity of elaborating these two because we skipped it in the previous slide. Now, the relevance of an asset is very high because if it is expense, you have to charge it in your P&L. Dry docking done for a ship, is it expense or expenditure? Overhaul done for an aircraft, expense or expenditure? Multiple debates are happening over last 4 or 5 decades. There are multiple practices of accounting and finance treatment as well. Some recognize it an expense and write off, some create an expenditure and take it into the balance sheet. So does it enter P&L or does it enter balance sheet will depend upon the accounting treatment, which is based on how you understand the expense or the amount spent as an expense or as an expenditure. Then depreciation, only if it is an asset will you depreciate, otherwise it is charged. Only if it is an asset there is a capital gain, otherwise there is no gain. There is income. Only if it is an asset do you capitalize. And you as a finance manager in your career down the line, you will get to face this concept of capitalization and you will get tense when you face it. Only someone who would have seen an asset being originated as a constructed, as purchased and then uplifted, etc., will understand the value, the importance and the criticality of keeping an asset keeping every invoice, every bill, every valuable supporting document, and then call the whole docket as ownership document of this capitalized building, this capitalized aircraft or car, vehicle, whatever. For you to make a sale of this asset, the whole of the docket is required, and how and which component of expense. You paid some amount for the freight, you paid an amount for the inspection, you paid an amount for the packing. All, each and sundry needs to get capitalized, because all of these are spent to create the asset. Each of the bill need to be preserved, need to be documented, and docket will speak what is the value of the asset. That is the effort of capitalization. It needs to be available all through the life of the asset in your books. Value, yes, we discussed this. We value asset, nothing else. And LTV, loan to value. When you get into a bank as an employee after your course, you will frequently listen LTV word. Why? You purchase a house, the house loan company will tell you, we give you 80% LTV, which means of your 10 lakhs house, only 8 lakhs will come as loan. 20 the 2 lakhs will be your own money. So LTV is on asset. What is the asset value on that LTV? That is the importance here. Maybe this would have been a small bouncer for you, but doesn't matter. It'll have a seed in your mind, and when you come across the situation, you'll understand it more in detail. I'll brief this part than elaborating. Wealth, property, asset, broadly same, but we use the word wealth when we use the word for business and personal purpose as well. And wealth is something what accumulates and out of resources. When we use the word wealth, you are least bothered to understand what is the net portion, but you will say he is wealthy, of his wealth is 10 crores. When you say he is wealthy by 10 crores or his wealth is 10 crores, what did you mean? It is excluding the debts. So if his total, the value of all of his wealth is 12 crores, you will reduce the 3 crores debt, and then you'll say his wealth is 9 crores. Wealth is net amount. Wealth includes tangible, intangible, etc., etc. It is used for you as a person, it is used for your business as a business as well. But coming to the word property, property is a word which is not defined in any of the acts except in Transfer of Property Act. What is property? It could be wealth, it could be goods, it could be anything. So property is generally gross value. We don't deduct anything. He has a lot of properties, therefore we got our sister wedded to him, and we got our daughter wedded into that family because they have a lot of properties. This is the word which you would have used, very material and practical word. So we say, when we are using the word property, we say what is the value of the property, today's value. When you are talking about wealth, you will value, but not necessarily all the time. But when you're talking about property, you may value it and understand what is its true sense, and what would be the difference for you to acquire it or to dispose it, to all that stuff you will speak. And when you say property, generally you will not include goodwill, patent, trademark, all that stuff, unless you are a business and you're talking about their rental income or the yield income as well. Now, asset, the word which we have been discussing, need not be stressed here again, but we use the word asset only for business, not for person. Loosely we may use, but it is a wrong practice of using the word asset for person. Then asset will have definitely a claim, that is obligation, what we discussed, equity or debt. And assets in business are generally stated at their true relevant market valuations. Asset could be tangible, intangible. Some of the exotic special assets. There are a good number of companies in US and Australia which own the clearance center in Australia, is one of the best jails in the world. Trust me, you will not have the luxury what you have in Clarions, even at one of the best of the 7-star hotels, be it Shangri-La or anywhere. That is Hilton, Shangri-La, you name a hotel, and state it as the best of the 7-star hotels. You will not find the luxury what you'll find in Clarions Clearance Center in Australia, Queensland. Some of the prisons are owned, and those are listed companies. Kindly note, we are not talking about a private setup. They are listed companies, large listed companies. And gold, bullion bars, be it palladium, iridium, silver, gold. Gold is yellow metal, yellow beauty, yellow metal. All these are also assets. Livestock, birds, we discussed it. In Kerala, you will find many families owning elephants. That is their asset. I have a house, sir, that is 1,30,200, and I have an elephant that is 6 lakhs. my property. I want to divide it between my two daughters. You'll be surprised. Elephant 6 lakhs, house 1,32,000, and some gold, all that stuff, another 40, 50,000, small gold. That is how his asset position is. Elephant is also an asset, exotic or special asset. Art, diamonds, wine, of course, for those who are connoisseurs, wine is an asset. Bridges, rivers are assets. Yachts and aircrafts. We heard Kingfisher had an yacht, and yachts fetch the best of the money. Of all, it is the aircrafts and yachts which fetch the best of the realizable value than buildings, than goodwill, all things. Air rights, we skip that. In fact, air rights are the 16th floor sold to you for constructing your house. 15th sold to someone, 17th sold to someone. In the apartment, 16th floor is only sold to you. That is air right. Islands, our scholar Nityananda Swami owns an island and he termed it Kailasa. He declared it his own country, and then he declared Kailasa dollar, and he sends invitation to me, you, offering deputy governor, honorary deputy governor positions, and we are scared. We discontinued correspondence. All that funny stuff. Okay, now we came to the most important part, which is the theme what I requested madam to allow access to the future managers to learn. This is the definition of asset, formal definition of asset. Not that you don't know what asset is before we sat for this discussion, not that you have not heard this definition before we sat the discussion, but I'm sure you would not have this kind of clarity about asset after we discuss this definition. What that is. An asset is a resource controlled by the enterprise or the entity, interchangeably use words. An asset is a resource controlled by the enterprise as a result of past events from which future economic benefits are expected to flow to the enterprise or entity. I request each of you to speak for yourself along with me so that this gets memorized for all of us. An asset is a resource. I'm presuming that each of you is speaking for yourself in your own mind or aloud as per your environment where you are. An asset is a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow to the entity. An asset is, it has to be existing now. It can't be something which existed in the past and not exist now. It can't be something which is expected to come into the future. An orchard is an asset only when it has trees begetting fruits. An orchard when just had plants, there is no asset. An orchard which is cut out of the trees and plain land is not an asset. Asset is, which means it has to exist now. An asset is a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow to the entity. An asset is a resource. Is a. It means each single resource is an asset. Each single asset is an asset. If there is an asset which is clubbed with multiple parts, each of the component needs to be treated as a singular asset. That's the importance of the accounting, finance, or asset word all through your life and in finance and accounting also. An asset is a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow to the entity. An asset is a resource. What is the asset? We discussed it before also. It's a resource, it's a value. Where is value lying? Value can exist only in a resource. Therefore, asset is a resource. It's a source of supply, it's a source of value. It holds the value, it holds the source of supply. What doesn't hold any source of supply is not an asset, even if it exists for some reason. So, Akira in Japan is an abandoned house. If it has to be built, it could cost you again, let's say, 15, $20,000 USD. But it is not considered as an asset because it is abandoned and you are willing to hand it over with with reverse money to whoever is willing to accept it, because Akira, which is an abandoned house which can't be lived as of now unless it is rebuilt or renovated, will have continuing duties to be paid to the regulatory authority. Therefore, it's a liability, it's not an asset. Now you differentiate what is a resource, what is not. An asset is a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow to the entity. What is a resource? What did we say? An asset is a resource controlled. So it doesn't mean you need to own it. It doesn't mean you need to build it. It doesn't mean you need to construct it, or you need to originate it, or you need to receive it. You need not even possess it as well. Your building which is rented, you're not possessing it. The building what you bought in the market, you're not originated it, you're not received it. The crops what you have grown are owned by you, and you produce them. And the vehicle what you bought is not constructed by you, is not produced by you. So none of these is required so long as you control the asset. All you require is control on the asset, control on the usage of the resource of the asset. That is required. An asset is a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow to the entity. An asset is a resource controlled by the entity. Who should control it? Not the owner of the business. It is the business itself. It should not be by the government, it should not be by anyone. The entity alone should be the controller. Lessee will consider the building as an asset. Is the lessee owner? Of course, no. Has the lessee originated the building? Of course, no. Has the lessee constructed? Of course, no. Has the lessee, is the lessee operating? May or may not be. Therefore, it is the business what should control the resource to call as the asset. An asset is a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow to the entity. An asset is a resource controlled by the entity as a result of. As a result of. What does that mean? Which means you have done an act in the past which gave birth to the right of this asset, which gave birth to the control of the over this asset, which gave birth to the resource of this asset. That past act could be construction, purchase, origination, building, or receiving, growing, one of these or anything else as well. It could be receiving a gift also, but it was done in the past, and therefore the result is seen in the form of the resource titled as asset. An asset is a resource controlled by the entity as a result of past events. This is what we mention now. In the past, you would have done these things in the past and not now or in the future. An asset is a resource controlled by the entity as a result of past events and from which what is that which resource. So you're talking about the resource all along. Asset is stressing only on the resource, control over the resource, owning the resource, building the resource as a result of past and resource has emanated is a resource existing now. It is all about the resource. So an asset is a resource controlled by the entity as a result of past events and from which future economic benefits. What is this focus on? Future economic benefits. Future economic benefits, not past, not present. The mangoes what you have harvested in the last season from the orchard are not assets. The mangoes what you're harvesting now aren't assets. The mangoes what you will be able to harvest from the orchard in the days to come, only then is it future economic benefit. So the present past are not sufficient. The future expected. The stress is on expected. Future expected economic benefits are the resources and assets. So the expected word we stressed because it is stressed again because they need not be guaranteed. They need not be underwritten. They're just expected. So you do a business, one transaction, expecting profit. You may or may not get profit. Therefore, it is expected. An asset is a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow. Not just to arise and stay there. They have to flow into your P&L, into your balance sheet. They have to flow into the business, either directly or indirectly. They have to flow to the business. An asset is a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow to the entity. Like the control has to be by the entity, the flow of expected future economic benefits also should be to the entity only. Now, having completed this discussion of asset a bit faster though because of the time constraint, let's read the definition again. All of you read to yourself, I read to myself, I learn myself, you learn yourselves under the supervision guidance of all the faculty who are overseeing how you are learning. An asset is a resource controlled by the entity controlled by the entity as a result of past events, and from which future economic benefits are expected to flow to the entity. Okay, we move. Yes, this is a time to also have a bit of fun for a second. Couple of jokes. So what kind of asset is a river? Is river an asset? Of course, yes, we heard it. River is an asset. There are rivers in LP which are lent by the owner. If you want to ride your boat from point 1 to point A to buy your early morning bread for your milk mix, that's an asset. Joke is not that. Joke is what kind of asset is it? Current asset. So what did the overworked asset say to the other asset? I feel underdepreciated. Means you aren't appreciated. The essence is here. You worked and then you're not appreciated. That's the meaning here. And the funny joke for some person like me, what do you call a old accountant, a aged accountant, end of useful life, and we have to give something back to the next generation, future managers like you now. And this is if ma'am has to guide. Ma'am, if we have 2 more minutes, I would like to spend a couple of 2 minutes on this, ma'am.
Yes, sir. Yes, yes, you can.
Thank you, ma'am. Thank you, ma'am. So to exemplify what could the treatment of asset do to the whole of the business, to the whole of the economy, we have to discuss one of the examples. I've taken neutral example, no criticism, no appreciation, unbiased. I'm just like you, just that into 2 3 of your age, otherwise on same page. Xerox is a corporation, is a global corporation, which is the pioneer in introducing the photocopiers into the world. Today, as you know, Xerox word is adopted as a noun, as a verb into the dictionary, as a verb into the dictionary. So get this certificate Xeroxed. You not hear EDESING adding to a noun, but because this word is accepted in the dictionary as a word with meaning, as a word, as a verb, it became Xeroxed. That's the prominence of the company. So what is their business model, modus operandi? They import parts of the machine, photocopier machine. They import spares of the photocopier machine into India. We're talking about India, and they're all assembled. Once you assemble them, you find this kind of asset here. This kind of asset. What is this? A photocopier, some number, whatever it is. Photocopier asset. And what do? They capitalize the spares which are assembled into an asset, and they recognize this as an asset, as a fixed asset. What is their business? Selling photocopiers. What are they doing? The stock, which should have been otherwise a stock for sale, is capitalized as a fixed asset, and the process of capitalization is value, the cumulative value of all parts and spares imported and assembly done in our own law of land. And these fixed assets are leased to institute like yours, company like mine, and business shops elsewhere on operational lease basis, and renewed once in 11 months, 12 months, like that. Because these are assets in the books of the balance sheet of Xerox, on the right side of their balance sheet, depreciation is claimed, charged to P&L, and tax benefit is availed. After 3 5 years, when the photocopier machine loses its leasable feature, it becomes non-leasable. The net balance amount, let us say, of 2 lakh rupees. This is a live case which I have taken from the judgment. Whatever the value is normative, it could be 2 lakhs, 4 lakhs, depending upon the machine model, but standard business model, modus operandi. 2 lakh rupees each, non-leasable, any more leasable asset is decapitalized. Decapitalization is allowed in income tax. So what do? They decapitalize, and they realize the value of, recognize the value of asset as 1 rupee into stock and trade, which means fixed assets are converted into stock at what price? 1 rupee by decapitalization route. Therefore 1,99,999 is still part of block of assets, while asset itself is not existing in the block of assets. And 1 rupee asset entered the list of stock, and the stock which is in the stock list is sold to the customers. Who is the customer? I'm sorry, because until now you are the lessee of the asset, you are used to it, and you are comfortable using the same photocopier in your office, and you told him, if you can sell this, because I maintained it so nicely until now, if you can sell it to us, whatever price, we'll buy it. So 1 rupee asset is sold for 4 rupees, 6 rupees, whatever, or 10 rupees, and 9 rupees is booked as income and taxes paid by the company, and you are happy having purchased it at 10 rupees or 20 rupees because you thought it's a value for money. And the truth is, the total depreciable amount is still with the company. They have gained the depreciation benefit. They're continuing with the value of asset lying in their balance sheet, which is still more depreciable until the last rupee. Now, the income tax paid is less. On this income tax payment, the value of asset is only 1 rupee, or you would have sold it for 20,000, 40,000, or 10 rupees only. You don't care what you are paying because there is no expense on this. However, all the expenses what need to be apportioned and taken advantage of are well captured in the capitalization, and depreciation is claimed. That 1,99,999 is still continuing regardless of status, existence, non-existence, ownership of the asset, the photocopier, with whomever it is. 1,99,999 is continuing, of course, depreciating year on year at the rate, but the benefit is accruing to the business until the last rupee. It is depreciated to the last rupee. Now, this was objected by honest persons like you and me, but we have to go by the law. Law says if you read the spirit of the law, or as per the law, it is allowed. How can we object it? The practice need not be refused or objected. Therefore, the appellate tribunal upheld it, and the tax assessing officer went for appeal. Delhi High Court, the IIT and Delhi both have upheld it, and it became an approved, valid practice. Now, we heard all the assets definition, lot of, so, except few words, most of it dry, and a bit of learning if I am positive on your participation. Then it is time for you to list out what all assets you have in AMSOI, the place where you are studying. So it's an opportunity for me. I just read through about Durgabai Deshmukh ma'am, and then until now I didn't know about her nobleness, about her dynamism, and about the way she fought, and she believed in herself against the society system, and she believed in education institutions. Therefore, your institution named after her is a gesture, noble gesture by the management back then whenever it happened. And of all the assets, I highlighted best leadership because my respect is only for the best leadership, because of which I got this opportunity to discuss with you. So with this, and with sincere thanks to Director Professor Vijayalakshmi Madam and Secretary Sir and Kalyani Ma'am, Ramya Ma'am, and all the other faculty members, I wish all the future managers a life fulfilling, a lifetime positive and mutually beneficial association with AMSOI. We can take any questions, 1 or 2 minutes, or we can take up sometime later when we meet in campus to administer one of the case study which is long pending from my
That is what, Mr. Kishore, I'm about to invite you. You just visit us personally so that we'll be more happy. It is a kind of good interaction what students can
yes,
have
ma'am.
with you.
Surely, ma'am. Surely, ma'am.
So please make it. And your kind of inputs are really necessary for the students.
Sure, ma'am. Sure, ma'am. Thank you so much, ma'am. Thank you so much, ma'am. So with this, I take leave from all of you, ma'am.
1 minute.
Sir, 1 second.
Yes.
Thank you so much, sir. I now request Jay Swati, Assistant Professor, AMSI, to propose the vote of thanks. Thank you, ma'am. It's my privilege and honor to propose vote of thanks on behalf of management, staff, and students of AMS School of Informatics. It was very informative and interesting session on assets, where you have explained about utilities and specific relevance of assets and special assets. The examples were very relatable and simple. Thank you, sir. I also thank our Secretary Vice Satyanarayana Rao, sir, and Director Ma'am, Professor K. Vijayalakshmi Ma'am, for their constant support in organizing such events. Last but not the least, I also thank our faculty members for their cooperation and students for their active participation. Thank you, sir.